Hello, everyone. Thank you for joining our webinar today, CARES Act Funding and Single Audit Update. Today's webinar will be presented by Withum, Devin, Desmond, and Jennifer Stewart. Before we begin, I have a few housekeeping notes. Materials for today's presentation can be found in the toolbar located on the right of your screen. At the bottom of the toolbar, you will see a question box. All questions pertaining to the webinar content should be asked there. We will do our best to address them. Be sure to answer all polling questions to ensure that you receive CP credit for today's session. Once the webinar is over, there will be a pop-up asking you to complete a survey of today's webinar. Please take a moment to complete it. It is our way of being able to provide you with the best and most relevant programs possible. With that, I'm going to turn it over to Devin and Jen.
Okay, thanks, Jess. So good afternoon, everyone. As Jess said, my name is Devin Desmond. I'm a senior manager here with them. I've been here for a little over 10 years now, going on 11. Work in the nonprofit audit and tax sector, and a graduate of Villanova University back in 2010. And Jen, I don't know if you want to just give a little of your background.
Sure. I am in the technical resources group at Withum. I have over a decade of public accounting, specializing in not-for-profits, and I'm part of the New York State Society Not-for-Profit Organizations Committee as well.
Okay, great. Okay, so just kind of a brief overview of what we are hoping to cover today. It's kind of in the title of the webinar, but hopefully some of you might have joined us for, I would say, kind of part one of this presentation that we gave back in February, about middle of February, where we kind of gave a flavor of some of the new CARES Act funding that was coming out, as well as kind of a run through as to what is a single audit and what people would have to do in order to be prepared if you are required to now complete a single audit. And so what this webinar is going to do is kind of give you some updates on some of those fundings that we talked about last time, as well as some additional fundings that have been released since then. And then Jen's going to kind of walk us through some uniform guidance updates, which is probably more of the heavier meat of the overall presentation. So with that, I'll go ahead and hop right into talking about some of the funding updates. So the first program we're going to just chat about is the Paycheck Protection Program, otherwise known as the PPP. I'm sure everyone's fairly familiar with it now. It's been all over the news. I'm sure any of the a lot of people here on the call might be good friends with the folks on our SBA team and the great service they provide all of our clients in terms of navigating the minefield that is the PPP regulation. So just kind of want to give some updated stats through April 25th of this year in terms of what the total dollar amounts out there were, what's been forgiven, and kind of what's the status. So depending on what's the status of your PPP loan, if you have one, kind of which bucket you might be sitting in. So looking at the first series of funding that was back in 2020, so there was 5.2 million loans issued, and 2.9 million of those have so far been forgiven. There's still 183,000 under review, and there's still 2.1 million applications that have not yet been submitted and received by the SBA. So, if you kind of break it down, just about a little under half or so of those applications are still outstanding and not yet submitted as of April 25th. In terms of dollar amounts, the total lending was just 521.2 billion, of which 242.1 billion has been forgiven. Only 0.8 billion has not been forgiven. 84.3 billion is still under review, and there's again those 2.1 million applications make up about 194 billion in dollars in terms of applications not yet received for forgiveness. So it really kind of paints a picture of kind of where we are with especially that first round of 2020 funding, and I guess the first highlight would be the increased scrutiny on applications for 2020 forgiveness. Recently, the SBA received approved funding to go ahead and increase the audit task force that they utilize by 40% due to some of the high profile frauds that kind of have occurred on this program. I know everyone's probably seen stories on news about people applying for loans and buying Rolls Royces and high-end real estate and other things with the loan funds and not using it as to their intended purpose. There's also been delays in applications for those forgiveness applications over 2 million. Basically, if the loan is over 2 million, it's pretty much subject to audit by the SBA, and due to just little fee dragging, little not having manpower, it's been really kind of delayed across the board for these applications. And some banks are reporting that they've not had a single loan over 2 million forgiven, despite us, basically submitting for the forgiveness back in July, and they haven't even gotten status updates with the SBA. So a lot of, if you have a large loan out there and you apply for forgiveness and it's been status quo or haven't heard anything, don't worry, you're not the only one out there, and definitely seems to kind of be skirting that 90-day rule that they've thrown around. And then just some brief from the SBA Inspector General. He recently came out and said that it's probably going to take about a decade to resolve any of the fraud issues that are out there, despite this increase in staffing. So it might be around. I just want to give some stats for the 2021 funding. So it was kind of the second round of PPP2, as we're calling it. So there's been 5.1 million loans for $248 billion. There's been just over 5,200 lenders utilized, and just about a little over half of that, 2.7 million of this round of funding has been first draw loans. So it's people who didn't qualify or didn't take a PPP1, went ahead and took a PPP2 loan. And about 4.3 million of the loans are 50,000 under. So definitely not as, looking at some large numbers. So some of the others, and the average loan size, again, is then 48,000 when you run the figures. So, but some late breaking news on PPP. Journal of Accounting actually reported yesterday that the SBA has stopped taking new applications, as the general round of funding has basically been exhausted. So the only funding left is really for those community lenders in low-income communities and specializing in areas such as that. So hopefully, if you were looking at PPP2 funding, you went ahead and got your application in, because the general pot is now all dried up. Moving on from there, another key program is the Employee Retention Credit, otherwise known as the ERC. It was created by the CARE Act and then extended by the two acts that followed, the Taxpayer Certainty and Disaster Relief Act, and then eventually the American Rescue Plan Act. It can be utilized now for wages paid from March 13th, 2020, all the way through December 31st, 2021. Big change that came after, kind of right at the end of 2020, was that 2020 findings can now be amended for those who claim the credit, along if they receive PPP funding, as long as there's eligible wages to go ahead and do so. And the biggest thing again here is the notion of double dipping, which I know we covered back in February, that wages can't be used for both PPP loan forgiveness and the ERC. Okay. Some key changes that came out in 2021. So for those quarters beginning Q1 2021, qualified wages for employees increased from 10,000 for the year to 10,000 per quarter. And then the credit also increased from 50% of those qualified wages up to 70% of qualified wages. The significant decline hurdle to get over in gross receipts is now rather than 50% of gross receipts. All wages qualify if less than or equal to 500 employees, so it's no longer the 100 employee threshold. And then if you're over 500, only the wages paid to employees not rendering services qualify. So those that are basically not able to perform their function. And then employees not in existence in 2019 can still claim the credit. And anyone that has less than 500 employees can go ahead and qualify for advance payment of the credit if they file Form 7200. And the biggest thing is just to look to maximize the interplay salaries if you have a PPP loan also received, whereas making sure that you're just hitting that 60% threshold for the PPP loan and using any other additional salaries to be applied to ERC. Okay. Moving on next to the economic injury disaster loans, the EIDL program. So there was some increase in the limits here. So the COVID-19 EIDL loans are now increased. So it was previously 6 months of economic injury up to 150,000. Now we're up to 24 months or 500,000. Existing EL borrowers, so if you already took a loan of the first basically the round of funding of the program, you can go ahead and request an increase to new higher thresholds. The terms are going to remain the same: 30-year loans, a 2.75% fixed interest for not-for-profits that goes up a point for for-profits, and there's no prepayment penalty or fees. And again, a reminder, these loans are subject to single audit under CFDA 59.008. The EIDL advances, there was an additional 15 billion funded for these. That's basically for business and low-income communities can go ahead and receive advances up to 10,000. However, there are no new applications for this additional funding. It's really just going to be for anyone that applied previously but didn't receive the full 10,000, or anyone who didn't basically receive anything even though they applied in the first round due to lack of funding. And then they will, if there's additional left, for $5,000 supplemental grants for any additional communities in low-income communities with economic loss greater than 50%. And a quick reminder that these advances are then not subject to single audit. A new program that's rolled out since the last time we chatted is the Shared Venue Operators Grant. It's subject to single audit under CFDA 59.075. And it basically gave 16 billion that's available for grants for venue operators, for theatrical producers, museum operators, talent representatives, and other art-related areas in the live art and entertainment industry. And these grants can then equal 45% of their gross earned revenue up to 10 million. And just kind of lays it out. So if you were in operation on 1/1/2019, it's going to be equal to lesser of the 45% of your gross earned revenue, or 10 million. If you began operations after 1/1/19, there's a bit of a calculation you have to do where it's equal to a lesser of average monthly gross revenue for each full month of operations multiplied by 6, or 10 million. Some key factors in terms of eligibility for the Shared Venues Grant. Entities must have been operational as of February 29th, 2020. So obviously anyone that kind of went into business after the pandemic was declared a world health pandemic is out of luck on this. And then you must have experienced a drop of at least 25% in gross revenue in at least one quarter in 2020 as compared to 2019. So then entities have up to 1 year to use these funds on allowable expenses. Some allowable expenses, things like payroll, rent, utilities, scheduled mortgage and debt payments. You can't make any prepayments with the funds received, as well as independent contractors under 100,000, and then certain advertising capital expenditures if deemed necessary for operations. And grants will be issued based on priority. So the first round of priority is going to be given to entities which suffered 90% or greater revenue loss after April 2020. Then followed by entities which suffered 70% or greater revenue loss after April 2020. And then finally, it'll be all others. So basically, you just have to demonstrate that you lost 25% in at least one quarter of 2020 compared to that same quarter in 2019. And just kind of want to go ahead and sum up the interplay of some of the funding here that we've talked about, because it's all coming from the SBA and who's eligible for what if you've received one type or the other. So starting at the top with PPP. So first draw of PPP applicants may be eligible to apply for another draw of PPP. Moving over to the right, a PPP recipient may apply for SVOG if it received the loan prior to receiving SVOG. And if the amount PPP loan was received on or after December 27th, 2020, the amount will then be deducted from any grant award under SVOG. And then EIDL, if you've received a PPP loan, you can apply for an EIDL, but it can't be for the same purpose and cost as PPP. SVOG side, again, kind of just really reversing everything there. You won't be able to apply for a PPP loan after you've received the SVOG fundings. You may be eligible to receive an additional supplemental award depending on the hardship and the overall funding available. And you can apply for EIDL, but it can't be for the same purposes as the SVOG. And then EIDL, again, just kind of untwirling everything from there. I think that brings us to our first polling question.
And here is our first polling question. We'll give it a few more seconds as the polls are still coming in. All right, we're going to go ahead and close the poll.
Okay, so are we back on me?
You're good to go, Devin. Yes.
Okay. Yep, and the answer for that one, I should have been, C. So yes, you can have a PPP and SVOG funding, but only if you receive the PPP first. So great. Okay, just going to continue running through some additional programs here that are funded. First, again, it's another new program, which is the Emergency Rental Assistance Program. It's subject to single audit under CFDA 21023. And basically, it's funds provided to grantees to go ahead and provide financial assistance and other housing stability to eligible households. And to be eligible, so households must first be obligated to pay rent on a residential dwelling, and then have at least kind of one of the following: have one or more members qualify for unemployment benefits or experience a reduction in household income or incur significant costs or hardship due or indirectly due to the COVID-19 outbreak. One or more members must demonstrate the risk of homelessness, or the household has a household income at or below 80% of the area median income. Okay, and basically how to determine eligibility. So a lot of this, how does one determine if they're at risk for homelessness or whatnot? It's really, probably the highest level would be just kind of signed attestations by the household member attesting to that they're eligible. Other things such as past due rent or utilities notice or evidence of unsafe living conditions. And determining the median household income, it's either going to be calculated as annual income in lines with HUD guidelines or the AGI from their most previous 1040 filing. And things the funds can go ahead and be used for, so things like rent and rental arrears. Obviously, any rental arrears will be paid first before any future rent payments are granted. Utility and home energy costs, relocation costs, including rental security fees and rental fees if they have to go ahead and move into a new dwelling, reasonable accrued late fees, and then even internet service provided to any new rental units so that they can have access to things like telehealth and other programs. Okay. Moving on to the HHS PRF funds. Going to kind of go a little bit quicker through this because we did kind of cover this in depth in our last conversation, but just some reminders. These are subject to single audit under 93498. There's two options for reporting: the single audit, or basically a GAGIS financial audit of all HHS awards. That's really going to be important on the for-profit side, not so much on the not-for-profit side. And as such, it's basically for healthcare-related expenses and lost revenue attributed to COVID-19. Again, those healthcare-related expenses can be things, G&A expenses such as mortgage rent, insurance, personnel fringe, healthcare-related supplies, equipment, IT, facilities. And then anything not spent on the above can go ahead and be used on the term lost revenue attributed to COVID-19. And those options to report are basically the difference between 19 and 20 actual, 2020 budget and 2020 actual, providing that the budget was actually submitted and approved by March of 2020, basically the outbreak of the pandemic, or an alternate reasonable methodology of estimating. But if you choose that route, you will have to submit a written explanation as to why it's reasonable and probably subject to scrutiny. Big thing with this is that uncertainty still exists. The portal is still not open. It's really, was supposed to open back in February, and we're still here, some almost 3 months later with the delays in the portal launch. So just everyone's not so sure on timing of this. In terms of receipts or expenditures, basically, what should be reported on CFA in terms of single audit? Is it the cash received or the money spent? Again, bringing in the whole concept of lost revenue. The financial reporting framework, is it accrual, modified cash, cash basis? Disclosure requirements, is it going to be the same as a single audit? Is going to be any additional in terms of having to explain the lost revenue? And then again, just timing of expenditure. So is it when the funds are received, or is it when the funds are incurred? Just still a lot of questions out there that HHS will have to clarify at some future date. Quick word on vaccines. So COVID vaccines are not eligible to, or not to be presented on the CFA and not included in the scope of single audit. Basically, any other vaccine-related award should be presented and subject to single audit. So things like preparation of sites for administration of COVID-19s or any funding for administering the vaccines under a 93.461 should go ahead and be included on the CFA. So just also a reminder, please go out and get vaccinated if you were able to. Higher education emergency relief fund, so the HEERF, the second round. Again, this is subject to single audit under 84-425. Some changes from the earlier iteration really just include some basically supplemental funding for existing grantees, but also the ability for new grantees to apply, and expanded use of funds, basically going ahead and using more for allowable expenses and things like that, and less of a demand on making sure it's given a student aid, including that. So the modified the share of the financial aid grants, so that's down from 50% to what they're terming as the same amount. And so that same amount being that if you received any funding in the first round, basically that required amount of financial aid would be the same number here in the second. So we've known to be a lower percentage. And again, there's also in the idea of allowing for reimbursement of lost revenues. Okay, so probably one of the more important things we're going to cover today, at least in my section, is going to be the uniform guidance due dates. So the OMB issued memo 21-20, which instructs basically federal awarding agencies to go ahead and allow recipients and subrecipients that haven't filed yet their single audits with the Federal Auditor Clearinghouse as of March 19th, 2021, and with fiscal year ends through June 30th, 2021, an automatic extension for up to 6 months beyond the normal due date. No further action is required by the awarding agency or the individual recipients or subrecipients seeking approval of this. A reminder though that the earlier deadline of either this extended deadline or 30 days after receipt of the auditor's report continues to apply. And just a word to stay tuned for any potential updates, because the original 2020 extension of 6 months was then eventually rolled back to 3 months. So there is precedent to go ahead and revise this at a later date. We're just kind of giving everyone a picture of what we're talking about. So looking at your fiscal year end, so if you were March 31st, 20, your normal due date would have been the end of the calendar year, but now that's all the way out to June 30th of this year. For your June 30, 2020, it should have been 3/31/21, all the way out to September of 2021. The December 30th, 31st, 2020s, again, should be usually due September 30th. And again, we're now out to March of 2022. And with that, I think that brings us to our second polling question.
All right. And here is our second polling question. Please remember to make sure you do vote and put in your poll so you can get your CPE credit for this webinar. Going to give it a few more seconds as the polls are still coming in. All right, going to go ahead and close this poll. And
Okay.
Here are the results.
All right, and so, yep, the correct answer would have been, so as of today, a calendar year end 2020 single audit is due really on the earlier BRC, so March 31st, 2022, or 30 days after the receipt of the auditor's report. So, okay, and with that, I'm going to go ahead and turn it over to Jen to bring us through the uniform guidance updates.
Thank you, Devin. Okay, so there's a lot of material here and a lot to get through in the next half hour. So I may skip over a couple things, but wanted to give you the full picture of the updates on uniform guidance. So as you may remember, the original goal of the uniform guidance that was essentially new, if you will, back in 2014 was really to improve effectiveness of the audit and reduce administrative burden on organizations. And in accordance with Title II of the CFR, Section 200-109, the OMB must review uniform guidance regulation every 5 years. So that review was just conducted. And there are revisions in 4 parts within Title II. Those are Part 25, which is the Universal Identifier and System for Award Management, also known as SAM. Part 170, which is reporting subaward and executive comp information, which we'll talk about shortly. There is a new section, which is Part 183, called Never Contract with the Enemy. And lastly, probably what you're most familiar with is 2 CFR 200, which is essentially the uniform guidance. Some of the main objectives really of these updates were to update the guidance to meet statutory requirements and align it with other authoritative requirements. And a lot of it is really clarifying existing requirements. So moving on to the effective dates, there are 2 sections that were effective August 13, 2020. That was the prohibition on certain telecommunications and video surveillance services or equipment. Those revisions actually apply to existing federal awards, and we'll talk about that shortly. And the termination section. And this section really gave those federal agencies more authority to terminate awards when the recipients are no longer meeting the goals of those programs. So you'll see later on, a lot of those key updates actually focus on holding grant recipients accountable to meeting those conditions, and those changes are included in subpart C, which we'll talk about shortly. The remainder of the changes are effective at the November date of November 12th of 2020. And OMB actually just released an FAQ on Monday, this past Monday, May 3rd, that answered some of the open questions regarding implementation dates. So generally, the revisions to the uniform guidance apply to federal awards made on or after the effective date. So they will not retroactively apply to any federal awards made prior to the effective date. However, there may be some instances if there's new statutory requirements that impose those requirements on existing federal awards. So obviously with the caveat that any recipients of federal awards should review their terms and conditions of the award to determine the applicability of those revisions. And really some of those key items is recipients will have to update their internal policies to reflect those uniform guidance changes. So for example, we'll talk about some procurement changes and thresholds and some subrecipient monitoring requirements upon accepting those awards made on or after that November date. As it relates to the incremental funding, the federal awarding agency can apply new or revised terms and conditions consistent with the OMB guidance. So when there's new funds to an existing federal award, when they're negotiating a modification or a prior approval, to a federal award with a non-federal entity. And we'll also touch on some indirect cost rates, and the existing negotiated indirect cost rates generally will remain in place until they're due to be renegotiated. So that is the latest and greatest. There is about a 60 or 70 page FAQ. If you're interested, you can look that up and look at some of those questions that were answered. Right, so the first part is part 25, which includes the guidance for federal agencies in establishing the unique entity identifier and universal identifiers for applicants of federal aid, recipients, and subrecipients. SAM, as you may know, includes information about applicants and recipients are required to provide information required to conduct business as a recipient of federal aid. So some of the key changes here include that Part 25 applies to federal awarding agencies, and there's some clarification regarding requirements for notice of funding opportunities and registration by applicants in SAM. And it established requirements for recipients to ensure subrecipients have a unique entity identifier. So subrecipients are not required to obtain an active SAM registration, but they must obtain a unique entity identifier. Okay, in part 170, this is reporting the subaward and executive compensation information. So it's required under FAFDA, which you may be familiar with, the Federal Funding Accountability and Transparency Act. It applies to all federal assistance subject to FAFDA, and we'll talk a little bit more about FAFDA towards the end of the presentation. The executive compensation portion is not required for all organizations. It's only required for those that must report awards in accordance with FAFDA, and if the organization has 80% or more of annual gross revenues from federal contracts and subcontracts and assistance awards, and 25 million or more in annual gross revenues from those contracts and awards. So again, it's going to be limited to those organizations and the compensation reporting related to those organizations. Those organizations will have to report total compensation for each of the 5 most highly compensated executives for the preceding completed fiscal year. So you could see that their goal there is some more transparency, and that's another common theme that we'll see throughout the presentation. Some of the important changes: OMB may allow some exceptions for classes of federal awards or recipients when they're not prohibited by the statute. The federal awarding agencies are now required to publicly report federal awards equaling or exceeding the micro purchase threshold. That's in 48 CFR Part 2, which we'll talk about shortly. And that information will actually be published on a website designated by OMB. So again, essentially trying to achieve more transparency here. Who's receiving funds? What are they receiving? How are they spending funds? And consistent with the FAR threshold for subcontract reporting, it raises the reporting threshold for subawards that equal or exceed $30,000. Now, previously it was $25,000. There are also some additions regarding notices of funding opportunities, some regulation and applicant instructions, and it also requires each non-federal entity now that's applying to have systems in place to comply with reporting requirements. In addition, there were certain definitions that have been updated and added in this section. Some agree to CFR 200, but some are slightly different than those definitions in uniform guidance and specific to this part. So unless the definition in this part refers to CFR 200, they only apply to this part. The next part that we're going to talk about is this new part, Part 183, called Never Contract with the Enemy. And that provides guidance to federal agencies on implementing the requirements that are applicable to certain grants and cooperative agreements. It was added in uniform guidance to meet statutory requirements, and it currently requires federal awarding agencies, before awarding a grant or a cooperative agreement, to check the current list of prohibited or restricted persons or entities in the SAM exclusions. It also provides instructions to the agencies when they become aware of any issues identified, and there's also some illustrative award terms as well. This only applies to agreements that are greater than $50,000, are performed outside the US, so that would include US territories, and to persons or entities actively opposing US or coalition forces involved in a contingency operation in which members of the armed forces are actively engaged in hostilities. So overall, probably won't have much of an impact on single audits, which is always good news. And with that, we'll move to our third polling question.
All righty. Here is the third polling question.
All right, which of the following Title II sections had changes based on the latest revisions to uniform guidance? Is it Part 25, Part 170, Part 200, or all of the above?
We'll give it a few more seconds as the polls are still coming in. Going to go ahead and close the poll.
All right, and it looks like the majority chose all of the above, which is correct. All right, so now we will move into Part 200 changes, which is really the meat of today's discussion and what probably most of you are very familiar with. So the key changes here are really definitional changes. There's an OMB crosswalk that actually is extremely helpful that shows the prior definitions and the changes that were made. There's a link in the PowerPoint. If you're interested, you can click on that. It will take you there and it'll show you all of the changes made to the definitions. In addition, there were changes to various subparts B, C, D, E, and F, which we'll talk about, and some changes to the appendices to align with the changes in the subparts. So we will dive in with the definition changes. All the definitions are now listed in section 200.1. And there are a few important single audit changes in the section related to definitions that I just wanted to cover. The first is recipient, and that has been clarified that it is usually but not limited to non-federal entities and does not include individuals that are beneficiaries of the award. Subrecipient was also clarified that it is usually but not limited to non-federal entities, and it revised federal program terminology to federal award terminology. The next relates to oversight agencies. That definition was updated to indicate that when there's direct funding that's less than 25% of total federal expenditures, and that includes both indirect and direct funding, that the federal agency with the predominant amount of total funding is the designated oversight agency for audit. Previously, that was the entity with the most direct funding. So I think that is a change that makes a lot of sense because now it includes direct and indirect funding. Fixed amount awards added cooperative agreements to the definition, not a huge change there. There were also some minor edits to discretionary and non-discretionary definitions. The renewal award is actually a new definition, and we'll actually be talking about this a little bit later as well, but it relates to an award made after an expiring federal award for which the start date is contiguous with or closely follows the end of the expiring federal award. And that has been clarified to include that it begins a distinct period of performance. So that will be important in determining allowability. We'll see that in a little bit. And lastly, cooperative agreements just clarify that it applies to financial assistance between federal awarding agency and a recipient or a pass-through entity and a subrecipient. So you'll notice on the next slide here at the top of the slide, the first three definitions relate to assistance listings. And that is because the term CFDA will no longer be used. So that is a new change. It won't be immediate. You'll probably see CFDA within compliance supplements and data collection forms that may still have that reference and language related to CFDA. So over time, that'll be implemented, but a big change in terms of terminology that we have been used to for quite a while. There was also a definitional change related to internal control that was updated to add processes designed and implemented by non-federal entities, and that they're required to follow OMB Circular A123, which talks about management's responsibility for internal control. Budget period is a new definition, and that relates to the time interval from the start date of a funded portion of an award to the end date of a funded portion, during which recipients are authorized to expend the funds awarded, including carry forward funding or other revisions. We'll talk a little bit about that shortly as well. And then the period of performance definition was also updated to the total estimated time interval between the start of an initial federal award and the planned end date. So that may include one or more funded portions or budget periods. So the identification of the period performance in the federal award does not commit the agency that's awarding the aid to fund it beyond the current approved budget. So what that means essentially is if there's an award that has a 5-year period of performance, but only 1 year is reflected in the budget period, which there are a lot of awards that say the period of performance is from 2020 to 2025, the budget period is from 2020 to 2021, the entity can only incur costs associated with that first year that it's funded, and it doesn't necessarily mean that they're going to be getting funding beyond that period. So just an important clarification there. Some more definitional changes, the micro purchase threshold, which is new. There was a change there, so you may know that micro purchases was the purchase of supplies or services which does not exceed the micro purchase threshold. There has been a change, so we'll talk about that shortly. And generally, the micro purchase threshold for procurement activities is not to exceed the amount set by the FAR at 48 CFR unless a higher threshold is requested by the non-federal entity and approved by the cognizant agency for indirect costs. So we'll talk about that shortly. Next, the simplified acquisition threshold. There is language added to the SAT definition. Currently, the new threshold is 250,000, which we'll talk about shortly. Previously, it was 150,000. So it just adds some language here that basically you shouldn't be defaulting to 250,000. The entity is responsible for determining that an appropriate threshold is selected based on internal control, risk evaluation, and documented procurement procedures. So it can't exceed the new threshold of 250,000, but again, it should be based on those factors and specific to your entity and determining what's appropriate. And lastly, just some clarification on improper payment and question costs. So question costs are not an improper payment until they're reviewed and confirmed to be improper, as defined in OMB Circular A133 Appendix C. All right, so moving on to Subpart B changes. So there were some clarifications within 200.101 that were added that federal awarding agencies may apply parts A through E of UG to federal agencies, for-profit entities, foreign public entities, or foreign organizations. The next item here, must being a requirement, should or may, is a best practice or recommended approach. That was clarified in the FAQ previously, but now has been formally included in this guidance, something that everyone's been following now for a while. For cost reimbursement contracts under FAR, if non-federal entities are awarded FAR contracts, the FAR applies and those terms and conditions prevail over the requirements that are included in this section. Section 200.110 includes additional guidance on the effective dates for negotiated indirect cost rates. So I touched upon this earlier, but basically it indicates that the existing indirect cost rates are in place until they expire, and the effective date of the change to the indirect cost rate is based on the date that the newly renegotiated rate goes into effect. Okay, moving on to Subpart C changes. So I mentioned earlier that some of the changes focus on improvements related to award performance. So there have been some additions to information contained in a federal award, and those include federal award performance goals, which indicates that performance goals, indicators, targets, and baseline data must be included in the federal award where applicable, and the awarding agency must also specify how performance will be assessed in the terms and conditions of the federal award, including the timing and scope of expected performance. So again, just more clarification and detail now to be included in those awards. There was an update of required items to be included in the awards related to general award information. So the award must now include budget period start and end dates, the total approved cost sharing or matching if applicable, and it revised the total amount of federal awards to include approved cost sharing or matching. There were also some additions related to the general terms and condition language that relate to future budget periods. So language needs to be included that if there are multiple budget periods, it's subject to funds being available, which I talked about earlier, and some termination provisions as well. We touched upon never contract with the enemy. That is a new section in this section as well, which is consistent with Part 183. And in regards to prohibition on certain telecommunications and video surveillance services or equipment, this is a new section within 200. It's effective August 13, 2020, and applies to existing awards, as I mentioned earlier. And what it basically does is prohibits recipients and subrecipients from entering into contracts to procure, obtain equipment, services, or systems that use covered telecommunications equipment or services from certain entities. So this related next slide has the specific sections within that section that documents those specific companies. All right. So moving on to changes in subpart D, post-federal award requirement. So some of the changes here related to performance measurement. So again, providing recipients with clear performance goals. Clearly, this is a focus on performance related to these changes. Internal control was also updated that non-federal entities must comply with federal statutes, regulations, terms, and conditions of the awards, and they have a responsibility over confidentiality as it relates to safeguarding sensitive information. So no real surprise there, making sure that there's a process in place to do that. Federal payment now includes additional information on returning interest on awards paid through HHS payment management system. As a reminder, payment methods must minimize the time elapsing between the funds anyway, but this just provides some additional information when interest is required to be returned through HHS. And lastly, we touched upon this a little bit, but revising budget and program plans clarified that budget and program plans include considerations for performance and program evaluation purposes whenever required in the terms and conditions. So again, if the budget period is only for 1 year, there's no guarantee of the additional funds for the next year until it is formally awarded. Some more changes in subpart D, modifications to period of performance. So if a federal awarding agency or pass-through entity approves an extension or a recipient extends under 200-308E2, the period of performance will end at the completion of the extension. And if there's a termination, it will end upon the effective date of termination. So again, a renewal award is considered a distinct period of performance, which I mentioned earlier. So now we're going to dive into the procurement changes. So the first section is 200.318, which are just the general standards. So non-federal entities must have and use documented procurement procedures consistent with state, local, tribal laws and regulations for acquiring property or services required under federal award or subaward. Previously, the section just referred to their own documented procurement procedures. And again, some competition items, again, fair price is fair, et cetera, that those will be met with documented procurement actions using strategic sourcing, shared services, and other similar procurement arrangements. So again, just some clarification there. And the following section, 0.319, again, just some more competition clarifications that all procurement transactions for the acquisition of property or services must be conducted in a manner providing full and open competition. We've heard that language consistently, and it talks about the methods of procurement to be followed. So these are some huge changes in the areas of procurement. Everyone remembers probably the discussions related to the bear claw when that first came into effect. So a lot of that obviously won't be changing, but the changes that will be included in this section and now are included are increasing the micro purchase threshold from 3,500 to 10,000, which I'm sure is a welcome change by many organizations. As I mentioned, the SAP threshold was increased from 150,000 to 250,000. There is also a self-selection increase to 50,000 for micro purchases, which I'll touch on in a minute. Entities may request micro purchase thresholds greater than 50,000, and there's 3 methods of procurement: informal, formal, and non-competitive. So informal procurement method is the first one. That's when the value of the procurement for property and services does not exceed SAT or a lower threshold established by the non-federal entity. So there's no formal procurement required in that instance. So that would include your micro purchases in addition to your small purchases. So those are higher than the micro purchase, but does not exceed the SAT. And the key change here, I think, is really that they may be awarded without soliciting competitive price or rate quotations related to micro purchases, and the entity considers the price to be reasonable. But the language that was added here is that that's based on research, experience, purchase history, or other information and documents in its files. So again, the intention I don't think here is to impose more documentation, but making sure that the entity has documentation on how this is a reasonable basis. So prior purchase history, etc. And now P cards can also be used for micro purchases. So non-federal entities are able to establish a threshold higher than 10,000 in accordance with certain requirements. There are self-certification requirements here up to 50,000 on an annual basis. However, the entity must maintain documentation to be made available if there is an audit or to the federal awarding agency. So there has to be a justification, a clear identification of the threshold, and any of the following supporting documentation. A qualification as a low risk auditee. So if you meet the requirements that you're a low risk auditee, that would be a supporting documentation. And the annual internal institutional risk assessment to identify, mitigate, and manage financial risks, or for public institutions, a higher threshold consistent with state law. Anything greater than 50,000 will need to be approved by the cognizant agency for indirect costs. The second method is the formal procurement method. Again, when it exceeds the SAT, this hasn't changed. That includes sealed bids or proposals generally when sealed bids are not appropriate, and nothing new here except the change in the SAT threshold. And the last is non-competitive procurement. So that's only under certain circumstances. There was just a change here if there's one circumstance when this can be used as a method. All right, some other changes, really more related to a couple things related to subawards and pass-through entities. I touched on most of these earlier. So one thing I'll just highlight that non-federal entities should provide preference for purchase, acquisition, or use of goods, products, or materials produced in the U.S. with there's some examples on the slide, and they must be included in all subawards, including contracts and purchase orders for work or products under this award. So again, some language here that would need to be included in some subawards if you give those subawards. And I touched on the NICRA, so we'll skip over that. A couple of changes in subpart E to the cost principles here. We talked a little bit too about the indirect costs. So previously, if you had negotiated an indirect cost rate and it was several years ago, but you weren't using it, you could not use the de minimis rate. This changes that. It has some expanded use now for the de minimis rate, and indefinitely if you are electing that. So you don't need documentation to justify that 10% rate, and it must be publicly available now on a website designated by OMB. So again, more transparency here. And lastly, in subpart E, just some new language here related to pre-award costs and publication and printing. Now you can actually charge those costs for publication and printing during closeout. Before it was previously it was before closeout in that case, and if they're charged, they must be charged to the final budget period unless otherwise specified by the federal agency. And with that, we'll move to our fourth polling question.
All right, and here's our fourth polling question.
Which of the following is not a change made to subpart D section 200.320? related to procurement. SAT was increased to 250,000. Micro purchase threshold was increased to 50,000. Micro purchase threshold greater than 50,000 may be requested, or grouping into 3 procurement methods.
Going to give it a few more seconds as the polls are still coming in. All right, going to go ahead and close this poll.
All right, so the answer is the micro purchase threshold was actually increased to 10,000, not 50,000, but there is that self-selection option where it can be increased to 50,000. So that was kind of a trick question. All right, so some of the key changes to subpart F as we wrap up, I have touched on these related to the funding, the direct funding, less than 25% of the total expenditures, who the primary agency is with the predominant amount of total funding, and related to audit reporting, there was just some clarification in that section that the auditor can provide an opinion on a special purpose framework. That was always the case, but previously it referred to opining on GAAP basis financials. And the changes to the appendices are really updated just based on what I previously talked about. So just to be consistent, nothing new here. And then lastly, I just wanted to touch on FAFDA. FAFDA is not new, but it's back. So many of you may know the 2020 Compliance Supplement Addendum now includes a requirement that the auditor must test FAFDA for all COVID-19 programs in the addendum, except for the Coronavirus Relief Fund, where reporting is yes in Part 2 in the matrix, and the program is direct and material, and the recipient makes first-tier subawards of 25,000 or greater to report that data through the subaward reporting system. It was extended to all major programs, or will be extended to all major programs, regardless of the funding source, for single audits with year ends after September 30th, 2020. So just something to be aware of in that case. For applicability, I just mentioned it's direct recipients that make first-tier subawards. So if you receive funding directly from the federal agency and make a subaward to another organization greater than 25,000, it is applicable. Or in certain cases, federal agencies may have indicated program exceptions to FAFDA. I imagine that will not be the majority most of the time. So just a couple of things on what the auditor will do, in addition to internal control procedures that would normally happen. There are certain audit procedures for recipients, so we'll select a sample of those first-tier awards, determine if it's subject to FAFDA. We'll look it up in the FSRS, which is the reporting system, and that system is actually only accessible by the recipient. So the auditors will have to coordinate with our clients really to review that information. We'll compare the information within the system to the documents maintained and report any non-compliance. There's a table format that's currently prescribed that's recommended if there is non-compliance. And this does not relate to testing executive compensation. It's just related to FAFDA. So it's back, unfortunately or fortunately, and just making sure that everyone is aware that it will be tested related to COVID-19 programs immediately prior to 9/30/2020, and after 9/30/20, it will be applicable to everyone. So I'll move to questions. Jess, I think you have those and you can read them if we have time. I know we're hitting 3 o'clock, but we might be able to squeeze them in.
The one question we did receive was, what are the gross receipts to be considered for ERC 20% threshold?
So the gross receipts, it's kind of defined for, and then kind of key for not-for-profits really is looking at fully gross receipts without any related expenses or reduction of those receipts. So probably the thing that most people want to think of is like investment income. Whereas, not-for-profits, it's required to go ahead and reflect that net of any investment expenses. It would be the true gross receipt in that number, right? So it would actually be looking at the, if you sold some bonds and then went ahead and had to pay, account management fee on that, you would disregard the fee, and that it really would just be the gross receipts. So again, just the income generated. Sorry, not the income, the revenue generated.
Okay. Well, I think with that, we just want to thank you all for joining us today. If there's any further questions, please don't hesitate to contact us. And Jess, we could wrap it up.
Yes. Thank you for attending our webinar. Please remember to take a moment to complete the online survey. Stay safe and have a great day. Thank you.